Ethereum could hit 5,000 US dollars before the end of 2025. That would be new all-time highs. And in this video, I want to show you the chart and the bullish technical scenario of how that could potentially unfold. I also want to give you the flip side, how there is an invalidation level for that bullish scenario and how it could actually end up also being the opposite. So let's dive in. If you're trading crypto and you're not doing that on BLOFIN, what are you doing? Create an account on BLOFIN through my link in the description down below for maximum bonus and cashback campaigns up to 9,400 USDT every single month. So what we have here is the weekly chart of Ethereum. You can see it's currently just about $3,000. Now, I did say in my last video that we have reclaimed this 50-week moving average, which you can see over here. But the question is, what happens next? So we obviously have these equal highs here around $4,000. Now, from a technical perspective, equal highs, they always tend to get taken out. Eventually, the only question is, what does the price do before it gets back there? And how low does it go before it goes higher? We obviously have the all-time highs too. So Bitcoin has already made new all-time highs. We're very clear about that at this point in time. We also know that based on previous historic cycles, the longest that any bull market cycle has gone on after the halving is 550 days. We are currently about 450 days. So we technically have about a 3-month window where upside could potentially occur, which is about mid-October. That also makes sense because seasonally or historically, the months of October and even November tend to be the most bullish in terms of performance. But that is coming up on the very end of the length of any previous bull cycle. Now, of course, things could be different because Bitcoin is gaining global adoption. We have ETFs. We have a more pro-crypto US politicians and president and all that kind of stuff. So you could argue maybe this time could be different. But let's assume it is going to be the same. That means we have about 3 months left of a window where this could potentially happen. Now, if we're looking technically on this chart, regardless of the fact whether it's a weekly chart or a 5-minute chart, imagine we didn't even know what it is, just purely on the price action. So we have these equal highs over here. We have an all-time high that hasn't been taken out, but we also have a low of 2022 that hasn't been taken out either. We have these lows here, which got taken out. So I'm just breaking this down for you, how you can look at the charts and look at the various concepts that you see on the charts. So what we can very clearly see is also that these lows over here, they got taken out with that little wick, and since then we bounced. We've reclaimed the 50-week moving average, which could potentially be bullish. A lot of the time, the bull markets happen above the 50-week moving average, but there's a flip side to that, and that is over here. You can see there's also the potential of the fake out, which is something we have to consider. So that's very easy. That means that if we close back below the 50-week moving average, we can, with great probability, make the assumption that this is a fake out, right? So if the price goes back and closes back below the 50-week moving average, below 2,600 with a weekly close, then we're looking at potentially lower and taking out maybe even the 2022 lows. And in that case, that would probably be the next bear market. But for now, we have to make the assumption that we are now still above. As long as we're above, it could potentially be something like this, or it could even be here already, where we've reclaimed it and we're about to go on a bigger pump. With the targets being the equal highs at 4,000 and maybe even all-time highs. Now, what we're also going to look at over here is we had this fair value gap, right? It dropped back into it, continued higher and reclaimed the 50-week moving average. So this is technically bullish. We're making higher highs and higher lows so far over here. So I would say that this strategy that could be followed, like purely from a technical perspective, even if this was a 5-minute chart or a 15-minute chart, regardless if it's Ethereum or whatever, in terms of the structure and the price action, is that we could be looking at targeting the all-time highs indeed. And now, in terms of getting an entry, ideally, we want to be taking it as close as possible to a retest of this 50-week moving average. So you can see that what we also have is we have a fair value gap here. So this could get tested, right? So we could drop all the way back, I would say as a maximum, to retest the 50-week moving average, which is around 2650, but there's no guarantee it gets that low. So basically anything between 2650, maybe the middle of this fair value gap, maybe around 2700, anywhere between 26 and 2800 is probably going to be a level for an entry based on the logic behind this. The stop loss can be tighter depending on the low time frame. Obviously, the more you zoom in closer to the time, the more of a precise entry with stop loss you'll be able to get. At this point in time, it's not really possible to be able to predict that right now, which means that in order to be safe, like, you probably need your stop loss here, which is very, very big, right? It basically means it's only about a 1 to 1.4 if it runs all the way to the all-time high, a 1 to 2 risk reward if you were to enter somewhere between 26 and 2800 with a stop this wide. Now, that's obviously still good. Doubling your money or tripling your money is still pretty good for any type of investment, especially with size. But if we can get a more precise entry on a pullback, and I do think we are going to get a bit more of a pullback, like I said, somewhere between 2600 and 2800 would be ideal. If we can catch that with a more precise stop, you can see the risk reward ratio changes from 1 to 2 to 1 to almost 5, and that becomes a lot more interesting. The idea being, like I just explained, that if this is correct, this assumption that we have reclaimed here, we are bullish and we're going for a run as a blow off top for the end of the cycle towards either 4K or maybe even new all-time highs, then we are looking for an entry as close to the 50-week moving average as possible, a stop just below that, because the invalidation is closing below the 50-week moving average again, which would make it a potential false trap like we saw in 2022. And if we do get back below that 50-week moving average with a weekly close, we are probably targeting the 2022 lows below $1,000. And it's probably going to be a bear market. That is how I see this. So these are always the criteria. It's always if, then, and you can very much see how that's being put into action. So if we reclaim, which we have, then the target becomes all-time highs. So we pull back, look for an entry, targeting all-time highs with a stop below it. And the lower of a time frame you're watching in real time, probably the more accurate of an entry you can get with a tighter stop loss. And the more accurate of an entry with a tight stop loss you get, obviously the better the risk reward becomes, where you're risking $100, for example, and you're making back 200 or 500 or maybe 1,000, 1 to 5, 1 to 8, 1 to 10 risk reward. And obviously with different sizes, you can obviously also do it with spot, which is obviously different. But if we're running to all-time highs, it is still almost a 2x on your money, right? So if you were to do this with $1 million and it goes to all-time highs at 5K, well, you're looking at a pretty nice gain. A 66% gain from current prices on $1 million is nice, or on $10 million, or whatever. The whales are accumulating, or at least there's some of them that are accumulating. For example, we see Bitmine Immersion doubles down on Ethereum, amassing 163,000 ETH after 250 million pipe raise. You can see this update from Arkham where it says this account bought $111 million ETH. They are up over 10 million. And this one from Look On Chain, SharpLink Gaming, they bought another 24,000 ETH 6 hours ago. So combine rather big accumulations like that with the fact that we have this potential bullish structure and we have reclaimed the 50-week moving average. I think there's merit to this idea, and as always, there's risk with any type of trade. So you know what you risk when you're wrong. That's what you do when you take a trade. The potential upside, the risk reward, if you're happy with that, you know what you lose when you're wrong, you know what you make when you're right. And if that's a decision that makes sense for you financially, then that is how I would potentially approach this here from a purely technical perspective. Let me know what you think. Do you think ETH is going to all-time highs before the end of 2025? Or is this a fake out? Is this a bull trap? And are we going lower? Are we already about to enter the bear market? Also, if you haven't done so yet, click the link down below. Make an account for BLOFIN. I trade there personally. I think it's a great exchange. And for anyone who uses my link to create an account and trade through that, I have huge bonus campaigns, cashback campaigns up to $9,400 every single month. even campaigns up to $63,000 in cashback, like the one we are currently running. Obviously, it's based on volume and certain conditions, but all of that is explained. Create an account on BLOFIN, it's free, deposit there, trade, and you'll automatically be eligible for all the bonuses and campaigns that I run for my referrals.